And I'm very happy to be with you, Madam President of the AIO, Delphine Torre, Secretary General Jean-Baptiste Tukumazina. Thank you very much for this invitation to be with you all today, and it's very nice to see all of you again. I do miss being together for AIO gatherings, but being here virtually with you all is a good substitute. Even though I must say it is very snowy and cold outside in Basel, Switzerland, I suspect it is a lot sunnier and warmer where most of you are. But good afternoon, ladies and gentlemen. I'm very pleased to be able to join you today, to join what's already been a very interesting summit, and to share with all of you a little bit of an insurance supervision perspective today. So the theme for today's summit is leadership during turbulent times. And at the IIS, which is a global community of insurance supervisors, we certainly believe that the insurance sector has a clear leadership role to play in the recovery from the COVID-19 pandemic, and that in turn, insurance supervisors have an important role to play in creating an enabling environment to help support an effective response to today's challenges. So in the time that I have with you, I would like to share, first of all, what we see as some of the key challenges coming out of the COVID-19 crisis, and perhaps some of the initial learnings that are emerging. Secondly, some of the key challenges that we see ahead for the stewardship of the insurance sector in the years to come. And thirdly, what initiatives at a global level insurance supervisors are putting in place to help support an effective response to these challenges. So if we can move to the next slide. Thank you. I would say, I mean, these challenges are, if anything, amplified in the African context. While the potential growth in the African insurance market is considerable, so last year, for instance, McKinsey estimated that insurance market growth on the continent is expected to grow at an annual compound growth rate of 7% per year, which is higher than that predicted for Asia, nearly twice as fast as for North America, and over 3 times that of Europe. But at the same time, we also know that the headwinds from COVID and other global challenges has the potential to blow this growth off course, with devastating potential implications for economic and social progress on the continent. What I want to share is that this is of key concern to the IIS, as we are committed to supporting the development of inclusive insurance markets, and strongly believe that regulators and supervisors have a key role to play in providing an enabling environment to support this growth. A large part of creating an enabling environment is about helping to ensure financial stability, and this in a way it's an important necessary condition for insurance market development, but it is not a sufficient condition. That's why at the same time, insurance supervisors have a key role to play in ensuring that the regulatory and supervisory environment is proportionate and appropriate, such that it is supportive of innovation and the societal role that the insurance sector will need to play in steering the broader economy to a more sustainable future. And what I can say is I guess as the first IIS Secretary General from an emerging market jurisdiction, I'm very committed to this agenda, particularly in Africa. I'm also glad that the IIS has more than 25 members from Africa, with membership continuing to grow, and one of the newest members we welcomed was the Angolan Supervisory and Regulatory Authority. And we also benefit from an African voice in our leadership, not only myself, but also Suzette Fulgersang from the South African Reserve Bank, who is one of our vice chairs of the IIS Executive Committee, with a specific mandate to help represent the voice of emerging markets and developing economies in our discussions. So with that context, moving on to the next slide, I want to talk a little bit about, as I said, maybe some initial learnings from the COVID-19 crisis. And certainly the crisis has presented a massive, unprecedented global challenge with not only devastating human toll, but also coupled with significant negative economic impacts, as Clement Jr. mentioned earlier. For the insurance sector, the challenges of the global pandemic have included both operational risks, so ensuring ongoing servicing of policyholders and other key functions, but also financial risks, in particular the impact to the asset side of the balance sheet. So the good news is that so far, the global insurance sector has proved resilient. In December last year, so very recently, the IIS published the Global Insurance Market Report, which you can see a picture of there on the screen, which provided an early analysis of the impact of COVID-19 on the global insurance sector. The analysis was based on data collected directly from a pool of large global insurers, but also a number of insurance supervisory authorities representing over 90% of the global insurance market. So it really, I think, does give a very good snapshot of developments. The report found that firstly, and here's the good news, despite considerable volatility in financial markets during the first half of 2020, the global insurance sector remained both financially and operationally resilient. And this resilience was supported by supervisory measures providing operational relief, but also significant monetary and fiscal support measures in financial markets in certain regions. The most significant prudential impact on the insurance sector was on solvency and profitability, primarily through losses on the asset side. However, solvency ratios generally remained well above jurisdictional requirements. So insurers remained financially healthy. On the liability side, the results vary greatly depending on the business model of the insurer. So for example, insurers involved in business lines like travel, event cancellation, and business interruption cover often suffered a significant impact, whilst those with more diversified business models saw a lesser impact. In terms of supervisory response to COVID-19, we found that this was primarily focused on, first of all, operational relief and resilience of insurers, so relaxing some regulatory and supervisory requirements. Prudential measures were mainly aimed at capital preservation, enhanced risk management and reporting, while conduct of business measures were aimed at ensuring the continued fair treatment of customers. So as I say, so far so good. However, vulnerabilities do remain, particularly given uncertainties about the duration and impact of the COVID-19 crisis. And these vulnerabilities include the potential for decreasing credit quality of insurers' investment portfolios as the real impact on the economy starts to be felt, and the impact of the deepened low yield environment. So even as the immediate health effects of the pandemic recede, we should expect continued pressure on insurers' assets, with continuing low for long monetary policy outlook, increased sovereign debt, and uncertainties about economic growth. So that's why the IIS will continue to have a very significant focus on risk assessment and looking through our global monitoring exercise at the ongoing impact of the COVID-19 crisis on the global insurance sector. But other than this short-term impact, if you like, the COVID pandemic has also led to, let's call it, some additional initial learnings, I think, and highlighting some what we believe are some key leadership challenges for the insurance sector. And these include the highlighting of the significant protection gap for pandemic risk, the importance of giving proper consideration to long tail risk, including taking action to address climate change, adapting to the new normal of an increasingly virtual environment and digital innovation, an increased focus on conduct risk and treating customers fairly, a recognition of the benefits of risk-based supervisory regimes, and lastly, the importance of cross-border supervisory cooperation and information sharing in maintaining financial stability and effective supervision of internationally active insurance groups. So in the time that I have left, let me touch briefly on each of these themes. Moving to the next slide. So we talked first of all about what the crisis has highlighted in terms of the protection gap for pandemic risk. And it was interesting to see that an AIO survey tells us that 96% of participants thought that protection against pandemic risk is inadequate, which is, I can say, is I think a globally shared perspective. And the issue of business interruption cover has attracted particular attention. The COVID-19 pandemic has, I think, starkly highlighted the limits on the type of coverage that the insurance sector can reasonably offer on its own, given the challenges of risk diversification. And finding solutions to this will, we believe, certainly require leadership, but also a multi-stakeholder approach, recognizing, as Clem mentioned, the importance of achieving social solidarity. Over the coming years, the IIS will take forward work to develop an insurance supervisory perspective on what we're seeing emerging as various policy proposals under consideration in various regions, including the importance of public-private partnership models, and we will stand ready to help facilitate these discussions at an international level between supervisors and with our industry stakeholders. Secondly, as I mentioned, climate change presents a significant tail risk to the global economy, and this really is the challenge of the day in many ways. Whilst the COVID-19 pandemic risk is in some ways discrete and can be tackled in the short term, the effects of climate change will be long-term and structural. So at the same time, we've seen significant evidence already of the impact of COVID-19, but also of the potential impact of climate risk into the future. And what this suggests, and what's very clear now, is that inaction is not an option. We also know that the impact on Africa will be particularly harsh. And I'm happy to say that within the IIS, we are taking action. The IIS, together with the Sustainable Insurance Forum, which is a leadership group of insurance supervisors convened by the United Nations Environmental Programme, has undertaken considerable work on developing guidance for supervisors on how they should adapt their supervisory practices to tackle the issues of climate risk, including both the management of transition and physical risks to insurance balance sheets. So I would encourage you to go to the IIS website to learn more about what we've produced in this space, including an application paper which recently closed for comment on very specific guidance for supervisors. But more than this, I think the IIS also recognizes that this is a watershed moment for the insurance sector to really step up and provide leadership in steering the broader economy towards a low carbon future. And we believe that insurance supervisors can help support these efforts. So insurers are, we know insurers are in the business of identifying, understanding, and managing risk, and this will be key to ensuring resilience of economic activities going forward in the face of climate change. Insurers can provide the risk intelligence that is needed to help shape economic and government decisions. So this is a key focus. Equally, insurers need to think about the steps they can take to increase insurance penetration in a sustainable way that is resilient to climate change. And we know, though, that there is a long way to go here. AIO figures show a lack of protection for weather-related events. Less than 5% of the total losses in the 2019 cyclones were covered by insurance. So in the run-up to COP26, which is taking place in Glasgow in November, we believe there's a real opportunity for the insurance sector to make a strong statement about how it can be a steward for this economic transition and help with the green recovery from COVID-19. So that's why over the coming months, the IIS, together with the Sustainable Insurance Forum, will be convening a global discussion amongst insurance supervisors in collaboration with other important stakeholders like the Insurance Development Forum about how we can support these efforts and contribute to COP26 commitments. Moving on to the third point, and if anything, this is the other major challenge of the day, the other major systemic change, which is about digital innovation, digital transformation. We know by necessity that the pandemic has had a significant impact on the way that insurers have had to do business and accelerated their use of virtual platforms and other digital technologies in response to challenges facing the sector and policyholders. insurers have found themselves having to invest meaningfully in digitalized applications to maintain their ongoing resilience, ensure the delivery of uninterrupted high-quality services to policyholders, and improve access to affordable and appropriate insurance cover. Concurrently, the increased uptake of digitalization for core insurance functions has also magnified the sector's exposure to increased cyber risk and insurance fraud. What I can say from a supervisory perspective is that these accelerations have similarly resulted in a number of challenges for supervisors in their efforts to maintain effective oversight of the sector since the onset of the crisis. For example, they've had to reevaluate and shift their supervisory priorities to focus immediately on potentially new and heightened risks arising from the crisis. Additionally, they've been forced to adapt their supervisory processes and teams very quickly in response to, for instance, mandatory shutdowns and other social distancing restrictions to ensure effective remote supervision. So to support our members in their response to these challenges during the crisis and beyond, the IIS, together with our partners, the Financial Stability Institute and the Bank for International Settlements, is currently working on a paper that explores ways in which supervisory processes have been adapted or replaced even since the onset of COVID-19. The paper is based on insights and experiences from the senior leadership and frontline supervisors of authorities across both emerging and advanced markets. And what I can share already is that one of our key findings is that those supervisors who adapted quickly, both in terms of enabling regulation, as well as through their own internal digital transformation efforts, have found the crisis to be a catalyst for improving the overall efficiency and robustness of their supervisory processes more generally. These efforts have included more regular and focused off-site engagements with insurers, often facilitated through the ease and convenience of video conferencing, and more real-time and streamlined data collections as a result of secure online regulatory reporting portals. And I think there's a general sense amongst our members, supervisors, that many of these new measures that were introduced in response to the pandemic will likely persist in the light of the emerging new normal for business as we head into an increasingly virtual world beyond COVID-19. So whether it's through a reduction in on-site supervisory reviews, or technology-driven changes to regulatory reporting, or other interventions required to support digital transformation, supervisors do have a key role to play in responding effectively and timeously to the accelerated pace of digitalization experienced by the sector. And that's why the IIS will continue its efforts to support members across all of our regions as they grapple with these challenges in adapting to the new normal now, but also well into the future. If we can turn to the next slide. Let me continue on this theme of some of the initial learnings. And one of those, as I said, is that the crisis has also served to highlight the pitfalls of conduct risk. On the positive side, what we found is efficient claims handling, clear communication with policyholders regarding coverage for losses, and voluntary initiatives to provide relief for policyholders has helped deepen confidence and trust in the insurance sector. and will at the same time contribute to longer-term economic recovery efforts. But at the same time, on the other hand, we've seen some very public disputes about the coverage for policyholders in the face of ambiguity in policy contract terms, in particular business interruption cover. And this unfortunately has worked the other way in terms of undermining confidence amongst consumers in the sector. And we know that demand for insurance coverage, and I say this particularly in markets such as Africa, where in many cases it may be a customer's first instance of interaction with the insurance sector, we know that demand for insurance is most likely to increase where consumers believe that they are being treated fairly and that insurance offers them tangible benefits. So that's why I think this needs to be a key focus, not only for supervisors, but also for the sector as a whole. Our members are increasingly keen to learn from examples of best practice on conduct regulation. And it should therefore come as no surprise to you that as good supervisory practices emerge, they are likely to be rapidly replicated across jurisdictions. But I think the insurance sector can also demonstrate leadership by staying ahead of this curve, guided by universal principles of treating customers fairly throughout the insurance life cycle. What I'll also add is that in light of the fintech revolution that I mentioned, much of the IIS's current focus is on the application of these treating customer fairly principles to innovative digital solutions as well. Also, to give you a flavor of two specific areas where we plan to contribute to this evolution in the coming years is taking lessons from the COVID experience and looking at two particular areas. First of all, insurer culture, which we see as a key intersection point for managing both prudential and conduct risks. And we believe that by looking more closely into the culture of an insurer, supervisors may be able to identify and address prudential and conduct issues in a more timely and effective manner. And secondly, we'll be looking at helping to develop guidance on key indicators for supervising insurer conduct, including a special focus on indicators in inclusive insurance markets, as well as the potential for the use of supervisory technology or SupTech to help improve the efficiency of monitoring these conduct risks. Moving on to the next point, around building solid foundations for effective insurance supervision. What I want to mention here is that as well as supporting our members as they seek to address many of these emerging and accelerating trends, such as climate risk, pandemic risk, conduct risk, we're also providing assistance to help with the fundamental building blocks that are essential to effective insurance supervision. So I was very interested, therefore, to see that AIO members believe that those firms operating within risk-based solvency regimes were better able to respond to the challenges of COVID. And this is a great insight in a year that the IIS will be starting a project to support the development of risk-based solvency regimes in emerging markets and developing economies. A subject very close to my heart as well. So we're in the early stages of a 2-year project that has significant support from our members, and which will seek to provide practical guidance to help our members develop risk-based solvency regimes, and really understanding what are the steps that you need to take, and really, if you like, hands-on practical support. And we know that such regimes are integral for protecting policyholders, maintaining financial stability, but also for supporting market development. And then lastly, the experience of COVID-19 has also served to underscore the importance of cross-border supervisory cooperation and having a common language for the supervision of internationally active insurance groups. So what was clear is that COVID-19 was a global crisis, but also that it demanded a global response. And that's why I think the IIS agenda has become particularly relevant over the past year. We're very fortunate that the IIS finalized just in time a holistic framework for the assessment and mitigation of systemic risk in the global insurance sector, which we call the holistic framework, and which was adopted by our members in November 2019. And this involves a global monitoring exercise that we were able to immediately put to work last year in assessing the impact of COVID-19 on the global insurance sector, and have a collective discussion amongst supervisors from all regions of the globe about what this might mean for the stability of the sector and for supervision of insurers, and which resulted in the global insurance market report that I mentioned earlier. So this global cooperation on risk assessment will continue to be a key focus of the IIS going forward, because it really helps to complement macroprudential supervision at both the domestic and the regional level. Secondly, I will say that the COVID crisis also reinforced the need for a global insurance capital standard as part of a common language for the supervision of internationally active insurance groups, which we call COMFRAME. So we are currently 1 year into a 5-year monitoring period for the insurance capital standard. And the observations from last year from this, what was really a real-time stress test, are providing very valuable information to help us further refine the ICS, so that by the end of 2024, we end up with a global supervisory tool that will build mutual understanding and provide a common language for discussions of group solvency amongst group-wide supervisors and host supervisors. So I'm glad to say that the ICS project remains on track despite this turbulence, and that we expect participation in the ICS monitoring period to continue to increase over time. So I hope that provided you a flavor of what are some of the very topical issues being discussed at the IIS, what we see as the key challenges and how we're responding. In conclusion, I guess I would say that whilst it is probably still too early to take definitive lessons from the COVID-19 crisis, there are certainly some initial insights and learnings that we believe, that I shared, and that we believe call for a strong, proactive leadership response from the insurance sector. The insurance sector is going to have to be front and center in helping to build back better from the COVID-19 crisis, and creating more resilient and hopefully more socially more solidarity in societies. And the IIS, I can say, is very actively engaged on how supervisors can contribute to this end in collaboration with industry initiatives. So I look forward to our discussion and your ideas on how we can carry forward this partnership. Thank you very much for the time.
Thank you very much, Jonathan, for this presentation and for giving us some insight on what ISS is doing. Few words from my side. What I've learned on it is that today we only have 25 members that are registered from Africa that are registered in the ISS. What I believe is not sufficient, because I believe that we have at least, if you count that we have 54 countries or 53 or 54 countries in Africa, so we should be much more than that. Okay, so I encourage all our regulators here in this conference just to make sure that they register to the ISS. Ce que j'ai aussi retenu en fait, c'est que l'ISS a bien résisté au Covid, en fait, a proposé des solutions au Covid. Les compagnies d'assurance continuent encore à bien résister. En termes de solvabilité, les compagnies restent encore solvables, mais on pourrait connaître des tensions en fait au niveau de tout ce qui est sur leurs actifs. Des actions sont en train d'être prises sur tout ce qui est climate risk, sur tout ce qui est technologie, transformation digitale sont aussi à accélérer. Donc, plus de collaboration, je dirais, entre votre association et nos associations africaines, nos directions nationales. En fait, cela va permettre en fait plus d'échanges, plus de collaboration et aussi, je dirais, à ce que nos compagnies dans nos pays-là puissent avoir accès à des règles de contrôle, à des pratiques, on va dire, de standards internationaux. Thank you very much, Jonathan. I will open the floor now for questions. Already I have 2 questions here. I will just read them for you, and then we are going to take all the questions from the attendees or from the chat. The first question I have, Jonathan, is, given the bird's eye view of world regulations and regulatory work, what have been the most common responses by regulators to the COVID-19 crisis? We saw some get involved with claims settlement. This is the first question. I will go to the second one. This event is taking place about the same time as the World Economic Forum conference. Will climate take center stage there, and what is the future of the climate accords agreed to date? Those are the first 2 questions, Jonathan.
Great. Thanks very much, Omar. Very good questions. On the first one, so we are in a good position to share some insights there, because one of the things we did last year was to create a database of supervisory responses to the COVID-19 pandemic, and so we had contributions from, I believe it was over 75 different insurance authorities sharing with us what they've done, so that other members could learn from that and look at how they could possibly adapt some of those measures to their own markets. So for those supervisors in the audience, I would encourage you to visit the IIS website, and we have a very sort of user-friendly database which you can use to see what others have done. I mean, you asked about some of the common elements. So I would say on the prudential side, on the solvency side, primarily what we saw was more frequent monitoring of the solvency position of insurers. So scenario analysis and stress testing, update their own risk and solvency assessments, so the AIOs 19. And then lastly, in some regions, supervisors also took measures to preserve capital by either asking or requiring insurers to limit or delay dividend payments, and other variable payments like variable remuneration. On the liability side, we saw a number of supervisors reviewing both the product landscape as well as clauses in policies in business lines particularly affected by COVID-19 to better understand the impact, potential impact on the balance sheet. But more often than not, these reviews of policy clauses had a particular sort of conduct of business focus as well, to understand the potential protection gap for policyholders and the impact on policyholder protection. I will say many insurance supervisors took early steps to ensure the fair treatment of customers, and that this remained a priority at a time where policyholders were particularly vulnerable in the crisis and were in many cases experiencing distress. So, for instance, supervisors either encouraged or required insurers to provide financial and other relief to policyholders in respect of their policy obligations. It was also very good to see that in many cases the insurance industry proactively and voluntarily took these steps as well. And you referenced claims issues, so certainly some supervisors continue to analyze exclusion clauses on pandemic-related losses, particularly business interruption cover, in some ways to help mitigate potential customer disputes and other conduct issues that may arise as a result of these exclusions, as well as I said, to assess the extent of the potential coverage gap. And in a few jurisdictions, this has been aided by court intervention to provide greater legal certainty on the interpretation of potentially ambiguous policy wording. I guess the last point is another common message from supervisors is that communication and more communication has been important during this crisis. Firstly, with firms to understand the impact of COVID on the firms and their balance sheets, but also secondly, between supervisors. So peer-to-peer exchange with supervisors to get a good understanding of the response from other jurisdictions and to learn lessons from each other. And as I said, our database, I think, is a good tool for that as well. So that was the first question. On the second question on climate risk, so climate change will most certainly be on the agenda at the WEF, I would imagine, and this would certainly be welcome. We know this is an issue that has been rising up the WEF agenda for a number of years, and this year climate features as a top 2 risk for both the likelihood and impact in the WEF's Global Risk Report, which draws on responses from 650 WEF members. So clearly a clear message there, which should also come as no surprise to in Africa, where the effects of climate change are already being starkly felt. So what does this mean for insurers? As I said, I think 2 things. Firstly, it means that inaction on climate change is not an option. Rather, there is a very clear and present risk that needs to be acted on now. I think policymakers and business executives now clearly understand these risks, but the real challenge now is to move from awareness to action. This means that insurers should be engaging and taking steps to make their own balance sheets climate resistant. But I think more than this, as I mentioned, it's also about recognizing that the insurance sector does have a unique role as risk managers and which can help society as a whole to navigate the transition to a low carbon economy.
Thank you, Jonathan, for those clarifications. There is another question from the chat. What common support mechanism are supervisory authorities offering insurance companies?
Well, I think this varies, but what we are seeing, as I said, in terms of our survey and our database, is providing some kind of both operational relief, but also an extent of financial relief as well. So on the operational relief side, there are many supervisors who have relaxed some regulatory and supervisory requirements. So if I think of an example, for instance, on the regulatory side, the requirement in some jurisdictions to have a sort of physical presence to conclude an insurance contract, so an actual wet signature on a document, for instance, has been relaxed in favor of allowing for digital signatures, an online conclusion of contracts, recognizing the difficulty of doing that in person in a socially distanced environment. Other examples are maybe some of the relaxation of some of the timelines around licensing requirements or extensions of deadlines for submission of regulatory reporting were some common examples of what was done to provide operational relief to insurers at a time where their focus really did need to be on ensuring continued service to policyholders and making sure that their key functions continued seamlessly. On the financial relief, I think in some jurisdictions there has been perhaps a little bit more regulatory forbearance when it came to some of the solvency positions of firms, looking through some of the short-term volatility, perhaps to providing a bit of time for recovery. Interestingly, in terms of capital regimes, I think what we saw is even with risk-based solvency regimes, most of them are pretty well calibrated so that the short-term noise does not have too big an impact. And that's why I say it was interesting to see that despite the turbulence and the volatility in financial markets, the solvency positions of the insurers, at least the ones that responded as part of our global monitoring exercise, which admittedly is the larger global insurers, that remained healthy despite the turbulence, in many ways because of some of the buffers and the sort of the measures to avoid pro-cyclicality in those solvency calculations. But I think broadly speaking, prudential supervisors have been monitoring things very carefully, but not taking actions too quickly, recognizing that insurers did need some time to adjust. And on the conduct side, like I say, I think this has been very much about very active engagement between supervisors and insurers about understanding how insurers are managing the potential conduct risks to customers and how they're managing to treat customers fairly during this turbulence at a time where policyholders are really struggling to meet policy obligations, and recognizing there are very valid reasons for that need to be accommodated in insurers' practices.
Thank you, Jonathan. Charles, any questions from the audience, from the attendees?
No, this far, no. We don't have any more questions directly related to the presentation.
Okay, so last chance to ask for a question before we close this session. Okay, I take it as a no. So Jonathan, thank you very much for your paper. Thank you for the insight. I'm sure we'll be having more registered association, African association to your association. So well done.
Thanks very much.